to look at ES here. All right. And what I want to tell you here is, I mean, it looks like some pretty obvious bearish structure forming here. And I say that because, okay, we ran up here, took buy side. Okay, obviously came down here on Friday, drops down NFP, slams to the upside. Okay, takes out this buy side liquidity pool here. And now we're creating an intermittent term high. Swing high here. Higher swing high to the left. Or, excuse me, lower swing high to the left. Lower swing high to the right. That's an intermittent term high form. Now what do we have? Well, here's our midnight opening. Rallies above that. Creates a London high. Takes out the internals. This now becomes an intermittent term high. So, because this is an intermittent term high at London, this turns into a long-term high. So we have absolutely bearish market structure forming, not to mention the SMT divergence. So Friday's high was not able to be taken out on ES. Friday's high on NASDAQ was able to be taken out, of course. Boom. Right there with London, what I'd suspect to be classic bearish power of 3. So what I want to see out of price here is I want to see a rundown into this low here. Okay, see how they kind of matched up here? I want to see us run down into that. Okay, and then, yeah, I'll just go ahead and map out previous daily low here on ES because this is what I'd like to see us run down into. Okay, first target is going to be the 830 opening from NFP last week. And yeah, these are 2 targets. That's it. Okay, I'm laying it out for you guys. Simple logic. Anyway, 15-minute chart. Okay, we work in 25% of the wick after delivering 830 opening. Did we pierce previous daily low? I believe we did. Okay, nice. So nice reaction off our previous daily low there. Previous daily low, I like that. I like how we worked in 25%. Now the next thing I'm going to look for is obviously this 5-minute fair value gap to be traded above, which we just did right now as I speak. And now what I want to see is a run above here. Okay, very simple. So look what's happening here right now on a short-term basis, right? Price trades down. Here's previous daily low swept right there. Boom. Here's a change to stay delivery above this 1-minute down candle. Here's a fair value gap. Boom. Hits that. Respects it beautifully. Expands above. Now what we'll see is, do we create another down candle? Do we create another fair value gap? Do we expand above that? Use it. Trade up above into those who have been holding short positions all morning. Now the only thing here now is we create this down candle and then expand away from that, right? And now we're on the whole next one. So typically you guys, like, you know, I say the same thing, right? I would look for this down candle to hold and then send price higher above the buy side, right? So at this point, I really more so wouldn't need this gap to be filled. Okay, so matter of fact, I'll go ahead and take this on micros, okay, just because it's not exactly the footing that I would want out of the marketplace. I'll go ahead and take this on micros, okay, just so I can have a wider stop. Okay, and then I'm going to add 2 more here, so I'm significantly deleveraging because I'm longing where I typically wouldn't want to, right? And what did I say? There's 1 of 2 scenarios. Well, it's going to pan out to the upside now, or it's going to drop down, take the sell stops, and then create the real move, okay? So honestly, I don't even have to wait for it. I'll just cut bait here. So it's minus $160, as you guys saw. So I can't believe it. An hour and almost 30 minutes later, the transaction finally comes to a close and we're left with this. Okay, so it's about 2 more minutes actually. We're going to open on that brand new hourly candle, which is pretty good. We kind of stalled for that now for the consolidation. So what I look for at this point is obviously the consolidation to be upset and then expansion above. So, okay, coming into it, we come up, match the lows once again. I still want to see it slide down there. Like I said, I want to see it slide down there. And what we do really 5 to 10 minutes after taking these lows is very, very important and going to dictate what I do going in the PM session. So most times when I look at it like this, like I like this as obviously inducement of longs, right? Enticing people to buy on a breakout, right? And they slam it down below the consolidation, right? And then create the real move. So if I'm correct about that, I'll definitely execute on it and, of course, go from there. As for the hourly chart, we just opened finally on the brand new hourly candle. We're down below previous hour low here. We obviously worked in the wick pretty significantly. The ES trades down to the rejection block here on the 15-minute chart, which is good. I want to see it reject off of that rather nicely. Check out Dow. Where you at, Dow? There you are. So it looks like Dow was actually able to pierce the short-term low here. So this could be a potential SMT divergence now because Dow trades down below the lows and ES and NASDAQ set that out. As I explained for about an hour now, okay, if I do find a re-entry here up into the targets, right, I'll look for a change in state delivery, look for retracement, buy in, and look for the same targets. So we're now, like, contrary to the initial entry, which is getting closer to the lunch macro, right? But it was right around 11:30. We're at a much more optimal time of day to now hunt these targets to complete model number 3. So definitely wouldn't buy in just yet. Okay, I like how we're kind of holding here, not even entertaining a large drop down past the lows here. Okay, I want to see it say relative to that 10 handle range that we traded down below. It could drop down below another short-term low one more time, which is fine, but I need to see an immediate expansion. Okay. All right, so if you take a look here, NASDAQ trades down to the rejection block on the 1 minute chart. Okay, that'll be this candle right here in the body closure, extended through. Like I said, could drop down below the short-term low one more time, but what we need to see here is an immediate expansion past that and completely trade above these up candles that were now formed inside the range. All right. Okay, notice how ES left behind this little double top here. Now, the reason why I even place significance on this double top here, right, left behind, is because majority of people have been making money this entire day here is to the downside. And then right above the double top, okay, which would also just have no line with previous hour high, large inefficiency. All right, so we drop down, immediately kind of upset the sensation of this quote-unquote change of state delivery. So we kind of subtly have a double SMT divergence going on here. So Dow's able to sweep the previous hour lows down here, and then it creates this lower low here on the short-term low. And then we go to NASDAQ. We see that it fails to make that lower low like Dow did. And then we go to ES, wherever you are. It fails to do so as well. So kind of like a little double SMT divergence going on here. The only one that I actually care about, though, is the fact that Dow swept the lows down here in ES and NQ didn't. So I really want to see us rip through this down candle coupled with half of this 5 minute Fairway gap, and then I'll look to obviously buying in on this thing. So trading down to this down candle here after we shift above it, right? Not showing immediate respect of it. And to me, actually trade this thing, like I told you guys, after we sweep the lows, I need a real expansion in price, ideally going past the opposing raise, buying on that inversely, right? And then obviously the same targets we were looking for all morning. So I mean, just think about what the masses will be thinking about right now. A lot of people are probably, if not sure, already thinking about shorting. And obviously I want to fade that, right? So when we drop down below these lows, it's a breakout, right? And then you scale up. Here's a 5 minute Fairway gap, which very well could work out. I'm just not going to be a part of it because I know where the largest pool of liquidity is, which is going to be resting above here. And if I'm really going against that, right, am I really going in tune with my model? Not particularly, no. So, like, I'm going to give it leeway to drop down below the short-term lows here, but I need to see that, like I said several times now, really just expand from there. Okay, if not, just expand right here. Okay, that once again, I don't believe we hit the down candle. Yes, we do. Okay, we touch it to the tick. I like the sensitivity off of that. Yeah, so I like how we held this down candle. That needs to remain true, of course, with the bodies. But yeah, no, if we did not sweep NFP's time boosted liquidity pool from Friday, of course, I wouldn't even be batting an eye considering taking it along. Okay, but along with obviously all the levels that I mapped out and us delivering up off of that, right, it just kind of adds to my conviction. But I can be wrong. I'm gonna be open to being wrong with open arms, but I don't think I'm wrong about this. And if it shows its hand, obviously I'll enter. Obviously this tight consolidation is not showing its hand, but if it yields expansion above the levels that I told you, I'll look for that first short-term retracement, buy, and aim up there. Okay, not bad. It's pretty much what I was waiting for now. Okay, now we're going to see if we can get a nice expansion above, or excuse me, a nice Fairway gap and expansion above opposing raise. All right, so anyway, looks good, like I said. Okay, definitely an A+ setup here. Should actually perform the entry model, just given what we're delivering up out of. Okay, we swept the internal sell side. We have many targets to the upside here. So yeah, obviously I don't really care about this 5 minute Fairway gap. Like, it's like, oh, wait a minute, what about the 5 minute Fairway gap? Shouldn't that be a short, right? Well, when you have narrative and context and obviously have a bias, right, you want to see that be traded past. You don't want to see it be used. So if it drops down, okay, this would obviously offer 1 to 2. So I'll be buying here. Stop loss down below. And then take profit above here. Okay, this would actually, in fact, be a 1 to 3 risk to reward ratio. Okay, let's see if we can drop down to the Fairway gap, and I'll buy it. Oops. And like I said, I'm looking to take 1 to 2 trades per day from here on out. So this will be the final trade of the day. So I'm going to buy that. Stop below, and then So I showed you guys the RR tool. It's a 1 to 3 risk to reward. And yeah, supports model number 3. We're in a more significant time of day here. And yeah, we simply just go for 1 to 3 here. Okay, minimum 1 to 2 R, but 1 to 3 even better. And then if you take a look here, we actually have a 16 handle stop loss, which is very reasonable. Now, with my come February, okay, if the chart loads me, come February on an AMP Live account, on AMP Live, would I take this trade? No. Why would I not take the trade come February on my AMP Live account? Because I'm using one contract on the NASDAQ. I'm not using one contract with a $5,000 to $15,000 fund of the account. It's probably, honestly, I'm leaning towards 10,000. Like I said, I'm still deciding. I'm just trying to keep it most realistic to someone that would be starting out and like obviously isn't rich and like, you know, has like a great amount of money. Like I'm not like someone who's like a millionaire or anything like crazy like that. I think you all know that by now. But I'm just trying to keep it realistic for what most people can do. But fact of the matter is, like I said, I'm going to be looking to use just around 5 micros on any given trade that we take on that account. Okay. So we got the fill that we wanted. We have the stop loss that we want. We have 3R. And now we just simply submit to the outcome. And understand that short-term P&L is not significant, no matter if it's obviously take profit hit or stop loss. And we just submit to it. NASDAQ expand here outside of this down candle. Could reclaim the Fairway gap, which is fine, but just really not preferred since we left it. Akagi really want to see inverse the Fairway gap. Well, I mean, it has a subtle close, I believe. Barely a close above there. I don't really care about closes above, though, like I always tell you guys, but obviously it would be preferred to see it push through that pretty strongly. So notice how the take profit is only above here now, that first pull of the quarterly, because I have better footing now and I have a lower entry and I'm using one contract, so it's going to be more than enough. Okay, I don't need to hold for the highs up here. Okay, so what I'm actually targeting here is this short-term pull of the buy side of the quarterly here, right? And then the very low end of this hourly Fairway gap. So yeah, we're obviously in the trade here. We're buying. We're expecting price to expand to the upside towards the buy side of the quarterly. We submit to it. And let's just sit here patiently and wait. No matter the outcome, stop loss or take profit, okay, we just move on accordingly and continue executing our plan day in and day out, and we'll still be paid nicely at the end of the week, okay? So consolidating here, preferably we'll expand out of the consolidation to the upside here. Okay, ES trades onto that Fairway gap. Want to see if we can move away from that. Okay, Dow's a little bit sluggish here. So remember, as the P&L fluctuates, okay, take note of how you feel. All right, and if you feel any type of way, you should probably deleverage. So short-term consolidation, definitely normal. I don't view this as anything odd. Okay, like I said, it's just a short-term consolidation, and we just wait through it. And obviously, ideally, it's going to, like, notice how it's continuously holding this inversion for Fairway gap. That's what you want to see for bullishness, of course. So 1 to 3 risk reward ratio, very, very reasonable risk, and waiting for this thing to deliver, take profit. Now I'm only going to move, so like if we expand above this Fairway gap here and start engaging this high, I'll put stop loss to break even, but for now I'm just going to hold it as is, keep everything intact, and then if we get that expansion above in correlation with this high here, right, move stop loss to break even, cut cost, and then obviously hold for the main terminus. All right, anyway, obviously good feedback here on the trade. We extend beyond these down candles that were formed, so I'd like to see us hold that and preferably just expand now here, so we are able to close through this inversion Fairway gap here now, which is good. We inverse that. Now the next thing I'm looking at is the fact that we're breaking through this up close candle here, okay, which is good for bullish order flow to the upside. Okay, so I want to see us have a real strong push to the high end of this down candle. So we break through this up candle, which is good. That's the next thing I wanted to see. Now I'm going to be looking at this Fairway gap, okay, and looking for this to be obviously smashed through. So good, everything looks good right now. Okay, I'm going to move to stop loss to break even once we get up above here, and I'm actually going to trail it here now. below the slow. Okay, so risk is now risking about 9 handles here, which is good. All right, so we create this 5-minute down candle here. We have the 1-minute down candles here as well. So I'm going to push stop loss up. So risk is cut in half, and we just simply hold for the runner now. So very, very good RR. So waiting for it to have a nice prominent move above here. Ideally, it would actually trade down here just a little bit, fill in this gap, and then keep higher. But we'll see what it does. So it's either just going to speed run here, or it'll have a short-term retracement down in the gap and then complete the move. So remember the prior transaction we scaled down, right, given what time it was and the footing. Minus $168, right? And then obviously we see the profit that we're in now over quadruples that, okay, which is what we strive for in any single trading day when we're taking multiple entries, win or loss, right? All right, so nice push above this inversion gap. So I'm just going to cut risk here and just put it right below the slow. So pretty much a risk-free trade, only risking 3 handles. So now we just let it ride. So perfect. So risk is diminished and take profit. Obviously the highs up here would be in the crosshairs, okay? So yeah, obviously a great expansion there. Didn't even have the short-term retracement, just actually just smashed through. So I mean, I said multiple times prior to taking this entry, it's just A+. I mean, I explained everything pretty well in advance, I believe. If I didn't, correct me, but most of you should have taken this, unless like you're still, you know, obviously learning and you're not quite there yet taking entries, which is fine as well. We all started there. So what I'm thinking here, to be honest, I really don't need more than $530 here on a Monday, so I'm gonna close out here. Okay, I'm gonna take my profit at $500, just because number one, it completes the move above buy side. Okay, it's still gonna get above here, but I just want to show you guys the first transaction minus $168. Second transaction, $500, right? That is making the winners stand out so much more than the losses, right? So first trade, we scaled down reasonably. Second trade, and I mean, if you want to be technical with it, the first loss, yes, it was more than 168 because if you times that times 3, okay, that's actually a $504 loss, and then with the $500 here, times that by 3, that'll be $1,500. So